Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Beko and my partner, Hari.
Hello.
Hey, everybody. How are you doing? How are you, Hari?
I'm good. I'm still wearing my White Castle shirt from the last episode. I am a dirty man. I have not... I just sit here in this room just waiting for us to record. I literally do nothing else. So
He's that dedicated. He's that much dedicated to the value investing, to the art and the craft of value investing.
I have one shirt. I save all of my money to buy stocks. So that's how it works.
Everyone would like to know what stocks you're buying, Hari.
They would. And if you paid me, I still wouldn't tell you. So
all right. In this episode, we will talk about this company called Medifast. It came to my attention. Hari, you knew this company before, but to me, found out about this company through one of our listeners that suggested I look into this in Twitter. So if you guys are on Twitter or on wherever, YouTube, wherever you get your podcast, you can reach out to us, get our attention, and suggest a company that you would like us to review. And here we go. This is a company that one of our listeners recommended. So here we are. We're going to go through the checklist, and conclusion is I'm really surprised about this company. I think this is a great company, and as you'll see, we'll go through the checklist and find out why that is the case.
And full disclosure, I used to own Medifast. It was only it was a double for me, but not much more than that, because I got tired of waiting. Basically, the company didn't grow, and then of course once I sold it, it went up 10x from there. So let that be a lesson to you. As soon as Hari sells it, it will go up.
Exactly.
So,
that could be very well functioned heuristics right there. Just gotta track what he sells and then buy it right after he sells it.
Just go through my trash. Everything that's in my trash is literally gold. So
yes. All right, let's get started. Hari, can you start us off with the disclaimer, please?
Yeah, this is the Value Investor TV podcast. We are the podcast that helps you understand the concepts behind value investing. We are not financial advisors, nor do we know your specific financial situation. So when making any investment decisions, please consult with the appropriate advisor and don't listen to me.
Exactly. Do exactly the opposite of Hari, and you'll make gold.
Yes. So that means buy options, use margin for everything. Don't use any of your own cash. Lever up to the hilt. Buy only stocks that are trading at 100 PE or higher as well.
1,000. I mean,
I'm sorry, 1,000.
4-digit.
Yeah.
I've never seen a 4-digit P in my life, man.
Yeah.
How insane is that? Anyway, let's get right to this. Hari, can you walk us through the checklist?
Yeah. So our checklist is something that we have put together over time to help identify companies that are, we use it as a systematic approach to evaluate any business. This way we don't miss anything or get excited and skip, steps. So the reason we do that is we want to make sure, like when Beko sees a company like this, he doesn't miss some red flags that we can do. So that's why we have a systematic way of doing it. So if you would like to get a copy of our checklist, it is free. You can email us info@valueinvestor.org. You can also use that email to get on our Slack channel. And if you want to talk about Medifast or any other companies like Darden, leave us feedback, from our last episode, please do that. Email us at info@valueinvestor.org, and we'll let you onto our Slack channel, or send us an email, Twitter, comments on YouTube, anywhere you'd like to get a hold of us, please do so. And we'll talk to you. But the checklist starts, is based on 4 different categories: the business, the financials, the management, and valuation. So Beko, let's get to it. Tell us what Medifast does.
So Medifast is a company behind this brand called Octavia. I'm not exactly how to pronounce it. Octavia, I think that's how you pronounce it. But it's a company that produces weight loss products. Also wraps the whole products and products with services. So you can think of, people might make comparisons to like Herbalife, for example, where people, they sell weight loss programs and weight loss products, healthy lifestyle living products, and things like that. They also do that. But the key difference with them is that they have what's called coaches. So instead of you purchasing through some random person, they have a designated direct sales sort of. They call them micro entrepreneurs. These are people who used to use our product. They love it so much they became sort of brand ambassadors. And another key difference is that the coaches, direct sales, micro entrepreneurs, they don't carry inventories like Amway, for example. They force people to carry inventories, and you have to manage the inventories and sell it direct. They don't do that. Coaches, the micro entrepreneurs, the direct sales reps, who are, by the way, are not part of the company. They're just contractors. They don't have to carry the inventory. So that's some of the key differences between them and other competitors. But the bottom line is they sell weight loss, weight management products, and also services.
Boy, that was much longer than 2 sentences. Uh, well, thanks a lot, Becco. I guess everybody's asleep now, so why don't we just call it a day there? All right. So that was very long-winded, but let's talk about the competitive advantages. So maybe this time it won't take so long. So we break down our competitive advantages into different types of moats. Those are 5 questions that we ask. Brand moat, network effect, switching cost, low cost provider, or intangible assets. So do you think Medifast as a company has a brand moat?
Yeah, I think so. I think brand mode is definitely at play. So Medifast is the company behind this brand called Octavia, and Octavia. Please correct me if forgive me if I'm pronouncing this wrong. Octavia is brand that I think people who are in the industry and people who are really excited and enthusiastic about lifestyle solutions and weight loss programs, they know this brand quite well from what I can read. And so I would say to that question, brand is certainly at play with this company.
Okay. Let's look at the rest, and then we'll kind of summarize which one do we think is their competitive advantage. Do you see any network effects that are at play here?
I think in a slightly different way. So when we think about network effect, it's where the product or goods or services become even more valuable as more people sign on to it. I think some of that is at play here, but in a slightly different way. And the reason why I say that is because the key differentiator for Medifast is that it is what I talked about earlier on, which is the coach aspect of it. Right? These guys, coaches who become who majority of them who were clients first. So they used the product first, and then they liked it so much, and they saw the opportunity to become their own entrepreneurs and be their own boss and things like that. And that's why they jump into becoming coaches. So it's a cyclical. It's a sort of a cyclical process. It's a baked in growth engine that if you get one people involved, they will become coaches, and then that coaches will generate more clients, and then that clients becomes, it's sort of like, I don't want to say a pyramid scheme, but it's sort of like that sort of play, right?
Okay. Would you say that carries with it some switching costs, or is that not part of the company?
I don't think there's a huge switching cost. really. If I buy dietary supplement from Medifast versus Herbalife, I don't think there's huge switching costs from my standpoint.
So what would be the compelling reason? I guess is to stay with Medifast is because you like the coach that you have. Is that
Yeah, I think
okay?
that's a big part of it. I think that's a huge part of it.
Would you say that is in and of itself a switching cost because you like your coach and therefore you want to stay with that coach or no?
Yeah, I think so. Yeah, maybe. Yeah, I should take that back. So I think we have to talk about two different personas here. One is the coaches. So what I see Medifast, the reason why I'm really excited about Medifast and why I think they're doing well is because they're targeting two different personas here. One is the end consumer. So these are people who are actually buying and purchasing weight loss products and services. But then the second persona that they're doing they're targeting are the coaches. Excuse me. And from what I can tell, Medifast puts a lot of effort on serving both of them, both the end users as well as the coaches. So with that in mind, with that setup, I think the coaches act as sort of the gatekeepers, and they help guide patients and consumers through different products and services, and it really is a linchpin to their strategy. So back to your question about back to the question about the switching costs. Yeah, I think that the fact that they have coaches involved in the whole orchestration of their health plan is in itself a switching cost there. Um,
Okay. Do you see them having a low cost moat in any way?
I don't think low cost is really as a moat that they play in.
Okay. What about intangible assets?
Intangible assets to some degree, right? Because they claim that their product is superior because of all the scientific research they have done. They claim that it's been tested and et cetera, et cetera. But that's the case with every other product out there. Every other product will claim that, so it's not really something unique to Medifast.
Okay. So in your opinion, it's really the brand and somewhat of their switching costs that kind of build a moat here.
Yeah, I would say so. Brand as well as that personal connection that they make, that people make with coaches, that
Okay.
get people hooked on to their product and services.
Okay. Let's talk about the company's long-term prospects and runway for growth. Where do you see this company in a few years, and what is their runway?
Yeah, so we can talk about for the finances in the second episode, but they have been growing like wildfire. I mean, really, they've been growing like crazy. In terms of the market, look, right, Americans are fat, and this is what the Consumer Reports and all these studies have shown. An estimated $190 billion spent annually on obesity-related medical conditions.
Mm-hmm.
So there's a huge runway. I mean, the market is big. Their top line is around $700 million. So I mean, they're not even at a percentage of what the market is out there. Of course, there's a huge competition out there, right? We talked about Herbalife and all these other companies, but in terms of market size and runway, I think there's a huge room for growth if they continue at this pace.
Okay. Um, and is this a capital intensive business? What does it take for them to maintain their business and grow it?
This is where it gets really interesting, I think. So if you think about a company that's generating $700 million, and I told you about the coach idea, right? The coach aspect of their business. I was suspecting that they would have a huge headquarters and big office and headcount. Their headcount, total headcount, employee headcount, is 550 people, and about 240 of them are just dedicated to like administration, HR. The rest is in like manufacturing, but that's a very small base in terms of asset. they, the only asset that they have is this one manufacturing plant in Maryland that they have to produce powder-based products, and everything else they subcontract to other manufacturers. So having said all that, you would think that they are very capital intensive business because they're producing, stuff like producing you know uh, uh, weight loss products and stuff like that. But in fact, they're actually not. Their asset base is quite low, quite small in terms of capex. It's quite, it's quite small too. So we can talk about the numbers in the later in the episode, but um, I would say it's no to that question. It doesn't require too much capital investment.
Okay. And um, do you see it having any issues with customers, suppliers, employees, or regulators?
Um, I think in terms of customer relationship, I think it's a really important that they nail this, right? Because they are dealing with two prong approach here. They are dealing with the coaches. They're also dealing with the customers, the consumers. So they need to nail this, and most of their effort is really nurturing that relationship, that coach and patient relationship, like we talked about. So that one's something that we have to really watch out for to make sure that they're keeping it up. In terms of suppliers, no real big issue. Employees, no real big issue. None of them are unionized. As I said, it's a small back office. 200 something people. Total employees about 550. Regulators, I think something we have to keep in mind here. They are classified, sort of bucketed along with like Amways of the world or Herbalife of the world. So and that sort of community is scrutinized quite a bit because of the malicious practice that a lot of people employ in pushing products down people's throats. So that's something to keep in mind. But no impending red flags that I can see on the horizon.
Okay. Well, I mean, I think that actually brings us to the end of this episode talking about the business side. Um, you know, to in the next episode we'll kind of go through the finances, look at their profitability, kind of scrutinize management, and then figure out what are we willing to pay for a company like this. Um, so I think in short, we have a business that's intriguing. It seems like it's a very high, uh, low capital investment, high profitability business, but we haven't really dug into it yet. That has a solid moat in a very, very large industry. So potentially a large runway here for them to expand. So anything else you want to mention before we close out for this episode?
I think we just have to keep in mind the aspect we talked about. The key aspect to their business, again, I think, is the coach. And I think we will add more color as to how that shakes out in terms of the numbers, in terms of the return on equity, return on capital employed, and all of that. We'll talk about in the next episode. But I think that's central to what they do, and they've proven to be very, very successful. So stay tuned. And again, full disclosure, right, Kari, you owned them before. I assume for the same reason that I find this company attractive. You own them for the same reason. They're growing like wildfire, and so stay tuned. Exciting company.
All right. Thanks, everybody.
Thank you.